You have been brainwashed. We all have. From the moment you turned 18, you were handed a specific rulebook. You were told that to be a successful adult, you need to build a resume. Not a resume for a job, but a resume for a bank. They told you that a 3-digit number defines your worth as a human being. They told you that an 850 credit score is the ultimate trophy, the holy grail. They told you that if you don't have a credit score, you are a ghost. You are financially illiterate. You are a loser. I am here to tell you that for 99% of the population, the credit score is not a tool for financial freedom. It is a tool for financial enslavement. Think about the terminology, credit score. What does that actually mean? It doesn't measure your income. You can make $1 million a year and have a 0 credit score. It doesn't measure your net worth. You can have $10 million in the bank and have a 0 credit score. So what does it measure? It measures how good you are at borrowing money and paying the bank interest. That's it. It is an I love debt score. If you have a perfect 850 score, do you know what that actually tells me about you? It tells me you have spent your entire adult life juggling debt payments. It tells me you are a highly profitable product for the banking system. Today, we are going to deconstruct the scam. We are going to look at the math behind the FICO score and why the richest people in the room often have no credit score at all. By the end of this video, you're going to realize that the game is rigged, and the only way to win might be to stop playing. First, we have to look at the history, because most of you think the credit score was handed down by Moses on Mount Sinai. You think it's a law of physics, like gravity. It's not. The FICO score as we know it was invented in 1989. Let that sink in. 1989. The Nintendo Game Boy is older than the FICO score. The Simpsons is older than the FICO score. Before 1989, people bought houses, people bought cars, people started businesses. How did they do it? They used common sense. A banker would look at you and ask 3 questions. Do you have a job? Do you have savings? Do you pay your bills? If the answer was yes, you got the loan. It was relationship-based. It was human. But in the 1980s, Wall Street got greedy. They realized they couldn't package relationships into bundles and sell them to investors. They needed to turn you into a statistic. They needed to commoditize the American consumer so they could securitize your debt. So, the Fair Isaac Corporation, FICO, created the algorithm. They took your financial behavior and boiled it down to a number between 300 and 850. They marketed this to you as a convenience. Build your credit, they said. It's for your future. That was the greatest marketing trick in financial history. They convinced the sheep to brag about how much wool they produce. Let's actually look at the math inside the algorithm, because when you see how the sausage is made, you're going to want to become a vegetarian. Your credit score is made up of 5 factors, and every single one of them is designed to keep you trapped in the system. Factor number 1, payment history. This makes up 35% of your score. On the surface, this sounds reasonable. Just pay your bills on time. Sure, but here is the catch. You only have a payment history if you have payments. The system punishes you for using your own money. The only way to get an A in this class is to borrow money first. Factor number 2, amounts owed or utilization. This is 30% of your score. This is the Goldilocks trap. They tell you don't use too much of your credit limit. But if you use 0%, if you pay off all your cards and stop using them entirely, eventually the system marks the account as inactive and your score can drop. They want you actively managed. They are farming you like cattle. Factor number 3, length of credit history. This is 15%. This is the most abusive relationship dynamic I have ever seen. The algorithm looks at how long your accounts have been open. The older, the better. This creates a hostage situation. If you have a card you hate with an annual fee, but you've had it for 10 years, you're afraid to close it because your score will crash. The algorithm holds your reputation hostage. Factor number 4, credit mix. This is 10%. This is my favorite one. To get a perfect score, you need a mix of credit types. They want to see a mortgage. They want to see a car payment. They want to see credit cards. Think about that. The algorithm explicitly rewards you for being in debt in multiple different categories. If you drive a paid-off car and rent a cheap apartment, you have a bad mix. You are a bad consumer because you aren't feeding the bank interest from 3 different sources. Let's run a simulation to prove why this score is a scam. I want to compare 2 people. Let's call them High Score Harry and Zero Score Zealot. First, meet High Score Harry. Harry makes $50,000 a year. Harry is obsessed with his FICO score. He has a 780. To get that 780, Harry has a car loan, $600 a month. He has credit card balances he carries occasionally to show utilization. He has a student loan. He pays $500 a month in interest alone. That is $6,000 a year of his post-tax income going to the bank. Harry has $1,000 in a savings account. He is living paycheck to paycheck to service his debt. But the bank loves Harry. He is a cash cow. Now, meet the Zero Score Zealot. He also makes $50,000 a year, but he decided to opt out of the game. He drives a 10-year-old Toyota he bought for $5,000 cash. It's ugly, but it's paid for. He rents a modest apartment. He cut up his credit cards 5 years ago. He has zero debt. Because he has no debt payments, he has extra cash flow. He puts $1,000 a month in the S&P 500. After 5 years of this discipline, he has a net worth of over $70,000 and growing. But when he tries to check his FICO score, it says indeterminable. The system says he is a ghost. The system treats him like a risk. Now I ask you, who is actually winning? Who is financially safer? If they both lose their jobs tomorrow, Harry is homeless in 30 days because the bank will come for his car. The Zero Score guy has cash. He can survive for 2 years. If you define winning by your net worth, the credit score is irrelevant. If you define winning by how much the bank likes you, then yes, go chase the 850. I know what you're screaming at your phone right now. But Victor, I pay off my balance every month. I beat the system. I get the points. Let's talk about the rewards trap. First, let me make a distinction. I am talking about consumer debt here. If you own a business and you use a credit card to manage cash flow or buy inventory, that is leverage. That is business. That is different. I am talking to you, the individual, financing your groceries and your latte to get 2% cash back. Do you really think Visa and MasterCard, multi-billion-dollar conglomerates, are losing money on you? No, the rewards are the bait. There was a study done at MIT. They studied how the human brain reacts to spending cash versus spending credit. When you hand over cash, your brain registers pain. The insula region of the brain lights up, the same part that lights up when you get punched in the face. It hurts to spend cash. You naturally spend less. When you swipe a credit card, that pain center does not light up. It is frictionless. The study showed that people spending with plastic spend anywhere from 12 to 18% more than people spending with cash. So let's do the math. You are chasing 2% cash back. But to get it, you are statistically likely to spend 15% more than you would have with cash. You are losing money to get a free flight with blackout dates. Now we get to the fear. This is how they keep you in the cage. Victor, how will I live without a score? Line number 1. You need a credit score to rent an apartment. False. I admit, it is easier with a score, but landlords want money. If you have no score, you show them your bank statements. You show them a healthy savings account. Cash speaks louder than FICO. Line number 2, you need a credit score to get a job. Mostly false. Employers check for defaults and bankruptcies. Having no score because you have no debts is rarely a disqualifier, except in very specific security clearance or finance roles. Line number 3, you need a credit score to buy a house. This is the big one. I can't buy a home without a credit score. Technically, that is false. You can do it. It's called manual underwriting. Companies like Churchill Mortgage still do it. But I'm going to be real with you. In 2025, manual underwriting is a nightmare. You will need a huge down payment, probably 30 to 50%. You will likely pay a higher interest rate than the guy with the 800 score. The paperwork will take months. Many lenders will laugh you out of the room. So yes, buying a house without a score is hard. But here's the better question. Should you be buying a house if you are broke? If you have to play the credit score game to scrape together a 3% down payment, you can't afford the house. The zero score player has a different strategy. He rents. He invests the difference. And in 10 or 15 years, he doesn't worry about mortgage rates or FICO scores because he buys the house in cash. That is the ultimate flex. Now, before I close, I want to address the 1% of you watching this. There are some of you who are incredibly disciplined. You have a high income, you never carry a balance, you use credit cards strictly as a transactional tool, you harvest the points, and you never overspend. If that is you, congratulations. You are the casino winner. You are playing the game without getting played. I have no beef with you. But for the other 99%, for the people trying to build wealth from zero, for the people who struggle with impulse control, for the people who are one emergency away from disaster, the credit score system is a trap. It tricks you into thinking debt payments are progress. They are not. Net worth is progress. So, if you want out, what do? If you're ready to go full victor, you close the accounts, you let the score die, you build liquidity and assets. If that sounds too scary, take the middle path. Keep your oldest credit card open. Put one small recurring bill on it, like Netflix. Set it to auto-pay the full balance every month. Then take the physical card and shred it. Then go to the 3 credit bureaus and freeze your credit. This keeps your score alive for emergencies, but removes the temptation to finance your life. You are in the system, but you're not playing the game. The system is designed to keep you on the hamster wheel. Money talks, credit whispers. Break the chains.